Going on, guys? Tyler Speedy here. So we're going to be going ahead and taking a look at crude oil. Now, I think that crude oil is going to go $70 plus per barrel. I'm going to show you guys why. First of all, let's go ahead and look at the monthly time frame. When we're looking at the monthly time frame, we can see price, and let's go ahead actually and fix the Ichimoku cloud, because how I like to set it up is I like to have everything pretty full in here. Let's go ahead and do that. Perfect. So looking at the Ichimoku cloud and looking at price, we can see ever since about May, June of 2015, we're reaching May and June of 2015 highs. So what we can see here is around 62.30 per barrel or $62 per barrel. We have some resistance there. Also, what we can know is this. Whenever price is trading beneath the cloud, it's pretty bearish. So you can see also that we have a pretty big and thick Kumo right here. So price is coming up to the Kumo. We can go ahead and see that if we go ahead and place a horizontal line here. Let's just mark up where their support is at, the resistance. So we can see at this level, let's go ahead and make it blue since we have the cloud in the way. Let's go ahead and look at this level. So we can see prices come up to the resistance right here. So something that we can see, price come up to resistance and price came up to the Kumo. So it can sell off. If it sells off, it's going to come to the 9-day EMA first, and then it might reverse and then go right back up. If price, and for anybody that's conservative, whenever you're trading crude oil, you don't want to have a small account while trading crude oil. You don't want to trade crude oil with a $100 account. Why? Because a lot of brokers only allow you to trade a mini lot or a standard lot. If you could trade micro lots on crude oil, great. If you have a $100 account, trade a 0.01. I'm looking for crude oil to go $70 plus. If we go to $70 plus, if we break this level right here, you better believe we're going to break $70 for sure, because that's the next level of resistance. So $100 accounts, don't touch crude oil unless you can trade a 0.01. $500 accounts, you can trade a 0.10, but if you're going to have your stop loss, I would at least have $1 to about $1.20 stop loss right there. And you want to wait for breakouts. You do not want to get caught in oil like this, in a sideways oil market. You want to catch a breakout on oil. So now that we saw in the monthly time frame, let's go ahead and look at the weekly time frame. So I'm going to go ahead and zoom out, and we're going to see exactly what's going on in here. So on the weekly time frame, we can see, let's go ahead and take this off. We can see prices above the 9-day, price of the 26-day. 26-day and the 9-day are both pointing slightly up, so that's really good for us. So we go ahead and zoom in. We can see that we have a Kumo twist here as well, twisted from red to green, indicating that price is going to remain bullish in the weekly. But what's strange is the monthly, we're having some resistance. That's why it's super important not to go ahead and make rash decisions right now. We went ahead and bought at around 61.10, 61.05, and I'm going to show you how we're going to play that. So let's go ahead and go to the daily now. So on the daily time frame, you can see price for crude oil is bearish right here. You can see price broke above, came back down, retested the Kumo, and then broke above. So about September or so, 12th, price has been bullish for oil ever since then. Now, we had a buy at 47.03, and we closed around like $55 per barrel. If we would have held that, oh man, this would have been a really nice trade. So, like I said, if we're going to have a pullback right here and price does decide to come back down, it's looking to come down to at least $60 per barrel. The next one could be $58.99, and we can go ahead and assume that. The reason is because if we look at the Kumo right here, the Kumo is pretty bullish. So let's go ahead and look at the 4-hour chart for crude oil. So I told everyone, price is going to come back down. Wait for price to play around price action this level. So price actually at around 61.05, you bought around like 61.10, 61.15. Anyone who's not in crude oil yet, you have to wait for price to break above the 9-day, because when we bought right in this level, we're going to put our stop loss to about break even, or you can put your stop loss right here if you want to take a loss on it in case price does decide to come back down to the 26-day and then go right back up. Your stop loss will be right there in case it breaks beneath the 26-day and wipes your trade out. Or you can go ahead and put the stop loss break even. You're about like 40 to like 50 pips in profit right now off this trade. So it's okay to put your stop loss break even because we don't want to let a winner turn into a loser. But if price breaks 62 right here and price decides it wants to go up, this is going to keep on going. Crude oil is going to keep on going to $70 per barrel, like I said. I'm looking for crude oil to be bullish this whole entire year. This right here, what's going on, and then price right here is really strong. I'm expecting this cloud to continue its way up. But of course, we have to break this important price zone. If we don't break that important price zone where major resistance is, then we're not going to go past $70 per barrel this year.